First up on the bulletin, Traxon, the market intelligence platform, has released its India Tech Funding 9-month 2025 report. In the first 9 months of 2025, the report says Indian tech startups raised $7.7 billion, a 23% drop compared to the $10.1 billion raised during the same period in 2024. It's also a 6% decline from the $8.3 billion that startups raised in the first 9 months of 2023. Now, despite the slowdown, India ranked as the third highest funded country globally, ahead of Germany and France, and only behind the US and the UK. In fact, my colleague Sumita Karir caught up with the co-founder of Traxon to discuss the startup's funding ecosystem in India. Here's a slice of that conversation.
Thanks a lot, firstly, for having me. So yes, to actually summarize in terms of the first 9 months of the current year, 2025, it saw funding of nearly $8 billion being invested across over 1,000 rounds. So this is a slight drop as compared to previous year. But in terms of run rate, we expect that this year might end up being between $11 to $12 billion, which is probably going to be slightly lesser or similar to what it is last year. And in terms of trend, so 2023 was the lowest year in terms of after the peak that we had seen in 2021, and last year was slightly better. And this year, based on the current run rate, it looks like sideways or slightly better than last year. When we started this year, it looked at a very strong Q1, and we were expecting to see a much larger overall funding number for the year. But given probably the global macros, especially amplified by the geopolitical conflict and the tariff pressures which is there, I think investors turn to be more risk averse and cautious. But overall, 2025 might end up being similar to last year or only slightly better.
Okay, so only slightly better or at the same levels that 2024 essentially ended on, Neha, is what you're suggesting as far as startup ecosystem funding is concerned. But let me also bring in another point. Would you agree that this funding drop is more about reduced investor interest or fewer startups that are seeking capital? You did speak about geopolitical disruptions that are causing, risk aversion amongst investors. But this dip that you have accounted, would you also attribute to perhaps fewer startups seeking capital?
So if you look at the numbers, the volume is decreased. So on one hand, so there are two things which is happening. So on one hand, investors are being more picky about the startups that they are backing. So especially, for instance, on the late stage, investors, want the startups to be having lower burn, either profitable or close to profitability. And the other thing that you're also seeing in parallel is that the quality of companies and founders have greatly improved. So now you see a lot more second-time founders starting up, or CXOs of scaled companies leaving and launching their own startups. So, though the overall number actually is slightly lesser, if you look at the average ticket size, that has, increased as compared to last year. So, so the investor interest, is high. But I would say they are, obviously being more picky about the companies that they are backing.
All right. So in terms of stages, Neha, there was a view that perhaps more number of VCs are interested in early stage funding, but actually the numbers that you have shared with us from Traxon, they present a completely different picture. Why?
Yeah, so if you see, the seed stage has actually seen, a drop. If you compare both the early stage, across the series, Series A, Series B, that is likely to be flattish. The drop that you also see is more on the late stage. So especially if you look at in terms of the number of more than $100 million rounds, in the first 9 months, there have only been about 10 rounds as compared to like 16 in the previous year. Which is similar to the trend that you see, also in terms of the number of unicorn getting created. So because of this, you see the overall numbers, on the later stage to be more impacted by that. But having said that, I think, like the volumes is lesser, but, the Series A and Series B, the check sizes have marginally increased.
Right. So you suggest that check sizes have marginally increased, but Neha, I'll bring you back to the question that I asked once again. It's essentially about seed stage funding that has seen a 39% decline YOY. This is not big capital that startups essentially ask of from VCs. Why do you think this phase of startups has seen a dip? Is it about not very many interesting startups that are coming in, which is perhaps also reflected in the lack of interest by VCs?
Yeah, sure. So there's a drop in the seed funding. One of the things that we are seeing from investors is that they are also saving some capital to back their existing portfolio companies. So you see a lot of investors backing their existing portfolio companies across the later stages as well, which include Series B and Series C. So because of it, the number of new startups that's entering into their portfolios is slightly lesser because they're also saving more capital for their existing portfolio companies.
Right, but Neha, this funding drop that we essentially are seeing, which has been continuing since 2023, is this funding drop part of a global trend, or is India, do you see, being impacted uniquely due to geopolitical factors which are impacting investor interest?
Thanks. So that's a great question. And if we compare the India funding to the global funding, so the global funding uptick has been slightly better than in India, especially in 2020. Like last year, it saw more than 20% increase. And this year, it's also likely to be 20 to 30% increase over last year, which is much higher than the increase that you see in India. Primarily, the global uptick has been on the back of a lot of AI companies investments. So if you leave actually the top few AI companies which have raised large amounts of capital, including companies like an OpenAI, XAI, Anthropic, then the trend is actually very similar to what you see in India.
Okay, so AI as a segment has attracted funding from investors. In terms of the kind of funding that you have seen, particularly with respect to later stage startups, which segments have done well?
Yeah, so in terms of the sectors, there are a few sectors that stand out. Retail continues to be one segment. Within that, B2B e-commerce, so companies like Inframarket, Jumbo Tail, Zworks have raised large rounds. The second most funded sector is fintech. Companies like Grow, Cred, etc. have raised large rounds. And the third is the transportation and logistic tech, right? Some hot emerging sectors include things like battery technology, on the back of green investments as being a common theme across a lot of investors. Second being quick commerce, so similar to what you see in the listed space, like Zomato and Swiggy, which are great IPOs that have happened in the last 2-3 years. Similarly, you also see in the late stage companies like Zepto, Snabit, etc., raising rounds. And then the third emerging theme is D2C brands. So you saw companies like Jiva, Foxtail, etc., raising rounds.
Right, Neha. Let's also talk about the IPO ecosystem as a whole, because IPO activity has remained strong. 26 companies going public in the first 9 months of this year. But will this momentum continue? Will this be sustained through the rest of the year?
So IPO market continues to be very active in 2025. And similar is the trend that you also see in the tech companies or the VC-backed companies, which are going IPO. So as you rightly mentioned, the first 9 months, so nearly 26 companies, tech-funded companies have gone public, including companies like Viewstone, Urban Company, Aether, etc. And I think one of the things which has also changed in terms of public market investors is that they are also warming up to new business models of these tech businesses. And overall, 2025 should look like a great year. And in terms of sectors, like consumer will continue to be one large sector, which you'll see IPO. So in addition to the companies that have gone IPO, you also have companies like Meesho, Lenstart, which are probably in pipeline, like Grow, Pine Labs also hitting the market.
Right, Neha. So you did speak about, of course, fintech companies, consumer fronting companies, but which other sectors are you expecting will gain in the IPO market when it comes to listings?
Yeah. So this year you saw two sectors stand out. So in addition to consumer, you also saw IPOs happening in the real estate tech. So companies like IndiCube, SmartWorks getting listed. And to continue to that, you'll also see companies in the B2B space, which is also one of the top funded sectors in the private market, to be also one of the sectors wherein you'll see some IPOs. So companies like Inframarket, for instance, which are fairly close to getting IPO'd.
Right, Neha, let's crystal ball gaze into what's to come in next to analysts, or are you expecting a rebound in Q4 of 2025 or early 2026 when it comes to funding? And what are the biggest risks that investors are citing, especially when it comes to deploying capital in India?
Yeah, so in terms of the overall funding, I think one thing which has happened very positive for the ecosystem is that the exit market has been fairly buoyant if you see across the
Yeah,
first 9 months. So the IPO
right.
we talked about, that has been fairly strong. Even on the M&A side, actually, it has been, 20% up than last year. And you saw fairly large, M&A happening, like companies like Minimalist getting acquired by Unilever or Wingify or Ecom Express, also having, getting acquired. So what this has resulted is in sort of return of capital or return of liquidity to the investors, and that is likely to be looped back as more primary funding in the ecosystem. So so most likely we expect that Q4 to be fairly strong. And investors overall, are excited about new opportunities, but they are obviously being a little cautious and about the global macros. And AI continues to be one big theme, which
Right.
people are looking at both as an opportunity as well as a threat for some of the other companies.
Right, Neha, just one final question before we let you go. Now, when we talk about, the remaining few months of 2025 or fiscal 2025, what kind of a number are you pegging when it comes to funding for the rest of the year for the startup ecosystem?
So most likely, we expect 2025 to end up anywhere between 11 to 12 billion dollars of total funding. This is probably comparable to what it was last year. If you would have asked me this question, in Q1, my number would have been higher. But given the pace of the last 2 quarters, which has been, we expect it to be sort of in line with what it was last year.
All right, Neha. On that note, thank you very much for taking the time out and speaking to us here on etnow and sharing your thoughts on what lies ahead for the startup ecosystem.
Right then, winds of change sweeping through the funding ecosystem as far as startups go, but the Indian story there still looking relatively solid. On that note, we'll slip into a short break here in Startup Central, but on the other side, we'll have more from the show. Keep staying tuned.